Risk-based assessment. Risk-based assessment framework should include assessment of the following. Financial institutions should assess the following parameters. Assess customer risk. Assess geographic or country risk. Assess product or service risk. And assess sector risk. What kind of industry or sector your customers are involved with. Prepare a risk rating based on the above parameters and enhance your institution's compliance regime. For example, your internal risk assessment parameters for effective risk-based assessment should ideally contain the following, including sector risk, into the parameters. Customer risk. Is the customer a company or individual in or from a high-risk industry? Is the customer known as a politically exposed person, a PEP, or has a negative reputation in the media or other open sources? Was the account opened face-to-face, or was it opened remotely? Are there resident accounts, and what is the level of EDD conducted? Is the relationship with the customer more than 1 year? Is the customer into cash-based businesses, charities, or NPOs? Is the account opened by delegation? Are the BNOs identified? And the period of dormancy and account behavioral patterns. Country or geographic risk. Customer born, residing, and or nationality in fiscal paradise, financial offshore heavens, illicit drug producing countries, medium risk country, sanctioned country, corruption, Transparency International Corruption Perception Index. Does the customer do business with high risk countries? And a territory near to conflict zones. Sector risk. Weapons and metal trading, precious metals and metal junk traders, camping, adventure sports and material dealers, real estate brokers and agents, exchanges and art dealers, used car and chemicals trading, satellite telephone and communications devices, general trading companies, and dual-use items such as night vision items, etc. Product or service risk. Does a customer just have an internet account? Does the customer have high number of similar type accounts? Does the customer just have a current account? Does the customer just have a savings account? Does the customer have a mortgage next to other products? Services involving banknote and precious metal trading and delivery. Suspicious transactions. Any transaction conducted or attempted by, at, or through a financial institution if the financial institution knows, suspects, or has reason to suspect that the transaction involves funds derived from illegal activities. It is intended or conducted in order to hide or disguise funds or assets derived from illegal activities. And it is conducted in a manner to avoid any transaction reporting requirements. The transaction has no business or apparent lawful purpose and does not match the profile of the customer. Reporting of suspicious transactions. It is the duty of all staff and officers to report suspicious and unusual transactions to your respective compliance officer. Failure to report suspicious and unusual transaction to your compliance officer shall attract legal and disciplinary action. The company's officers and employees must not warn or inform their customers when information relating to them are being reported to or investigated by the relevant authorities.